Okay, let's be real. The AI market right now is insane. Stocks are flying, chip demand's off the charts, companies are announcing AI upgrades just to get their share price up. But here's what most people don't realize. While retail investors are chasing the hype, the real money has already been made. And leading that charge? Tiger Global. Their portfolio just exploded in value. Again, we're talking billions in unrealized gains, all thanks to one thing, the AI supercycle. And what's wild is they saw this coming over a year ago. Let's break down how Tiger Global just leveled up while the rest of Wall Street's still trying to catch up. First off, this isn't luck. This is strategy. Tiger Global has completely rebuilt its portfolio around one central idea, that AI isn't just a sector, it's the new economy. Every company that wins in the next decade will either be powered by AI or selling to AI, and Tiger's positioned in both. So what's in this magic portfolio that's suddenly outperforming almost every major fund on the planet? Here's the breakdown, and it's genius. At the top, NVIDIA, Broadcom, and AMD, the holy trinity of chips. Tiger Global didn't just buy these, they loaded up before the crowd. While the market was debating whether NVIDIA was overvalued, Tiger was quietly buying through structured options and convertible notes. Now, those positions are worth billions. Next, the Cloud Kings, Microsoft, Amazon, and Oracle. These companies aren't just cloud hosts anymore, they're the factories of AI. Every model, every dataset, every app needs to run on someone's server, and Tiger's invested in all of them. Then they've got AI infrastructure startups, the unsung heroes of this revolution. Companies building high-speed networking, cooling systems, and even AI model security. These aren't the names you hear on CNBC, but they're the ones quietly enabling everything happening behind the scenes, and Tiger Global owns pieces of them all. Now here's where it gets crazy. Tiger's using AI to trade AI. Their in-house system, the Pulse, analyzes market data, research papers, and supply chain signals to identify momentum before it becomes obvious. It spotted increased chip demand weeks before NVIDIA's last earnings blowout. It predicted the cloud spending rebound before analysts upgraded their price targets. And every time the Pulse lights up green, Tiger moves, instantly. That's why they're outperforming the market by nearly 30% this year. It's not because they're lucky, it's because they're faster. But there's another layer to this, and it's the part nobody's talking about. Tiger Global isn't just holding AI stocks, they're engineering the flow around them. Here's what I mean. They're backing smaller, private companies that feed directly into their public positions. Think about that. They invest in a startup building cooling tech for data centers. That startup then gets contracts with Amazon or Microsoft. Those contracts boost the performance of Tiger's public holdings. They're making money on both ends, the supply and the demand. That's what makes Tiger different. They don't invest in isolated plays, they build ecosystems. And right now, that ecosystem is pure fire. Every corner of the AI world, from chips to software to hardware, is contributing to their returns. It's a self-reinforcing cycle. Now, the obvious question, is it sustainable? Can this kind of growth actually continue? According to Tiger, yes. And here's why. AI adoption isn't a trend, it's a migration. Every company, banks, hospitals, logistics firms, even governments, is moving workloads to AI-based systems. And that's going to create demand for chips, data storage, and compute capacity for years. That's why Tiger's not selling. They've already announced internally that they're treating their top AI holdings as core assets, meaning they're not flipping them for quick profits. They're holding long-term, just like they did with Facebook and Netflix back in the early 2000s. And we all know how that turned out. But they're not blind to risk. They're hedging too. Tiger's built an entire side portfolio designed to short overhyped AI names, the kind of companies that use AI in press releases just to pump stock prices. So when the bubble pops, and let's be real, it always does, they'll be protected. That's the difference between a hype trader and a hedge fund predator. Here's what's really crazy though. Even traditional investors are now trying to replicate Tiger's structure. Funds from London to Singapore are copying their AI stack model, the idea of owning every layer of the value chain, from hardware to infrastructure to application. But nobody executes it like Tiger does, and it's paying off big time. They've just posted their strongest quarter since 2020, with analysts calling it the AI comeback of the century. Their assets under management are climbing again. Investors who once bailed after 2022 are flooding back in, because this is what Tiger Global does best. They spot the next supercycle before the world believes it's real. They did it with social media, they did it with streaming, they did it with e-commerce, and now they're doing it with AI. So yeah, AI stocks are exploding, but for Tiger Global, this isn't hype, it's validation, proof that the rebuild worked, that their strategy wasn't luck, it was evolution, and if the trend continues, their portfolio isn't just going to level up, it's going to dominate. So here's the question, do you think we're still early in this AI boom? Or is Tiger Global already sitting where the next decade's wealth is going to be made? Because one thing's for sure, when a fund this smart, this fast, and this fearless starts leveling up like this, it's not just a win, it's a warning. The AI race has officially entered its second stage, and Tiger Global's already halfway to the finish line.